Speaking of the best minds, a former Reagan economic advisor is with me now. Art Laffer. Art, great to have you here.
Thank you, Deirdre.
Does the Fed's willingness to raise rates after an era of near zero signal to you that the U.S. economy is strong?
Well, it's a signal that they believe it's strong enough to do that. But honestly, they shouldn't have kept these rates this low for this long. If anything, Deirdre, they have caused the length of this great recession. It's their problems that they didn't really get the housing starts because no one's willing to put money at risk for 30 years at 3%. I mean, it's just a silly waste. So we've not had the mortgage funds available that should have been there to really spur housing. And, you know, as they keep raising it, sooner or later it'll start doing a good job. But they should have raised it a lot sooner.
To your point, Art, we have seen a very slow recuperation in residential housing, and there's other weak spots as well. Where do you see the most potential trouble?
Well, I don't see any trouble from their raising rates. What I see is this low rates has really discouraged people from lending money in the housing market. I mean, unless someone's got the wealth to guarantee it. But what you really need is market rates, because market rates where the demand intersects the supply is where you get rates that aren't so high as to discourage borrowers, but they're high enough to really encourage lenders. And that's what the Fed should always be doing. And for the last 9, 10 years, they have really caused this deep, long recession, and especially the housing component. And you can't have a boom in this country without a good housing market. You really can't.
You really can. I know about a decade ago, something like 20% of jobs in the U.S. were in some way linked to housing. To your point, Art, the Fed has become very political, and in fact, presidential candidates often make the case.
Yeah. And I know these people well. They're
in my opinion, Janet Yellen is highly political, and she's not raising rates for a very specific reason, because Obama told her not to.
My bet is they're not going to do anything until after the election.
They have kept those interest rates artificially low for one reason and one reason only, because they're trying to politically support Barack Obama and his agenda.
So, Art, we wanted to let people listen in who maybe don't follow as closely as you do. Does any one of those people make sense to you in an outlook for the U.S. economy?
Yeah, I think all of those candidates really make a lot of sense compared to the ones we have in control right now. I mean, when you look at the Republican candidates, in my humble opinion, is each and every one of them is highly qualified to be the President of the United States. I mean, from top to bottom. And what they're doing right now is they're honing their skills and they're discussing these debates to really get the best possible stance for the winning candidate. So I think they're all right on the Fed, and the Fed's done an awful job. And the Fed's part of the problem. You can't let a group of unelected professors run your country. Believe me when I tell you that. I is one, and you don't want me to run your country?
I don't know, Art. Well, you know, the vote is still out on that.
Believe me.
But since you're bringing in politics and how it fits in with the economy, I mean, we have had this near zero decade, but when you worked with President Reagan, I mean, those interest rates were bananas on the other end, right? They peaked in '81 at 20%. But I remember aunties, great aunties, they loved it because for savers, this was great.
Yeah, well, it was great for savers, but it was awful for borrowers. And what we did when we came in is we just made sure that markets determined the interest rates, not some group of academics sitting in a big building in Washington, people who've never really worked for a living in their whole lives. You know, what you really want to do is the Fed should set the long-run growth rate of the money supply or of prices, either way, and then get out of the way and let markets determine whether rates go up or down and whether more is needed or less is needed. That's the way it should be done. But these people believe they are unelected dictators of the U.S. economy, and they've done an awful job, and we've suffered enormously because of them, not in spite of them.
And I hear what you say. They need to be battle-tested. Always great to have you, Art. Thank you so much for the time.
It's really fun being with you.
Art Laffer joining me there.